Howdy, who all my stock market gamblers? Welcome today. I'm Tall Mike. So glad you're here. What do we got going on with the markets? Well, we had the S&P came down about 10%, tried to make a little rally up to the 200-day, got rejected there, and now we're still in this bottoming out process. Now, I do think we'll make another run at the 200-day, and maybe we can even get through that. We'll see how that plays out, but I don't think that this is the big crash yet. Big crash is still coming, or the big crash, I would say, more than 20. Once you get more than 20%, then you're into that bear market mode, and you're going to continue down to revert back to the mean about 50 to 60%, and could overshoot to the downside and be even worse than that. But I don't think this is the crash. I don't think so. Why? I think the bonds are holding up relatively well. I think they're going to pump money into this and give a lot of liquidity and push this market up one more time. We'll see if I'm right. Now, if we get down 20%, we're only down less than 10% on the S&P, but that VIX, you got to watch that VIX. The VIX, it stayed above 20 for 17 days straight. When the VIX stays above 20, bad things usually happen to the market, and that bad things means we might have farther to fall here. But I do think we're going to get another push back up. We're in a bottoming process right now. Came down, went up. Now we're going to make either a higher low or a lower low before we head back up again. But we're going to head back up again, is my opinion. We're going to get through the 200-day moving average. See, right now the 50-day is up here and the 200 days here, and the stock market's down here, right? Okay, so we're came up there. As long as that 50-day stays above the 200-day, that's the direction I believe that we're heading in. All right, let's talk a little bit about real estate now. I love this. Okay, I get these comments all the time anyways. But Mike, you've been wrong about real estate for so long. You've been saying it's going to crash for the last 2 years, and it hasn't crashed at all. Well, I would beg to differ. I'd even argue to differ, right? All right, let's talk about Billy Bob. What did Billy Bob do? Well, he sold about 2 or 3 years ago, right at the top. Now, maybe in your area, kind of flatlined. Some areas kind of drifted down. Some are slightly higher. Okay, but Billy Bob, he got out back here about 3 years ago, let's call it. All right. Now, what did Billy Bob do? Well, he took all of that money, put it into the gold market, and he went down to Mexico, and he's sitting on the beach waiting for this to play out. Now, I will make an argument here that this is already playing out. Now, okay, if you look at the price of homes come in real money, which real money would be gold, not in the nominal money. Look at, they can print as much nominal money as they want. That fiat currency, it's just numbers on toilet paper. That's all it is, right? And they can print as much as that as they want. They don't even have to use the toilet paper now because it's all digital, right? So they can print trillions and trillions, and maybe in nominal terms your house doesn't come down. I still think they'll come down in nominal terms also. But to argue that your house hasn't come down, your house is not going up. What's coming down, you're losing purchasing power in the dollars, right? In the dollars are losing purchasing power. Their house is not going higher and higher. The dollar is crapping out. Okay, now if you talk about real money though, real money, let's go back to 2016. 2016, right, about 8 years ago, let's call it, the average price home took 235 ounces of gold to buy it. You had to take 235 ounces of gold, go get the money, and then you could buy the average price home. All right. 2020, how many ounces of gold did it take to buy the average price home? Took 193 ounces. So if you had 193 ounces, you go down, you get the money, you could buy the average price home. Today, how many ounces does it take to buy the average price home? Average price home's around $400,000. Well, it takes about 131 ounces right now to go out and buy the average price home. Okay, so the price in real money, your home's gone from 235 down to 193 down to 131. You see, just since the year 2020, your home price has come down by 33% in real money. The crash is already starting, right? Now, nominal money, it's not starting yet, right? It's starting, but it's not crashed 33, 40% like I've been calling for. In real money, it's absolutely done that. Done almost 50% if you go back 8 years. years. 8 years ago, about 50% down. But you see what Billy Bob did, he sold up here, took the money, put it into gold. He can now take his gold, take half of his gold and convert that and keep half of his gold and still go buy the same house that he sold. Now, nobody can tell me that house prices haven't come down in terms of real money, because it's a fact. They have 30 to 50%. Now, will they do that in terms of nominal money? It is possible, but here's the thing. Your government is going to continue to steal your money. They're going to continue to print money into oblivion to make your money worthless. The money that you've got in the bank, let's say you had your money sitting in the bank waiting to buy a home. Well, just since 2020, your money has already lost 25% of its purchasing power by keeping it in the bank instead of putting it into real money. Real money being gold and silver. You put it into real money to protect yourself from the government. The government is not doing us any favors. As a matter of fact, look at okay, here's why I knew that gold is going to explode out. It's going to continue to go higher. Now, don't get me wrong. You see, we're already above $3,000 an ounce, and we're ahead of ourselves. About a year and a half ago, we were at $2,000. So we're already up 50% in the last year and a half. See, that's a big run, right? That's getting overextended, overbought. Hopefully, we'll get a better chance to jump back in and get some more if you have some dry powder on the sideline. Hopefully it comes down to 2,800. It could easily do that. Could come down to 2,600. At 2,600, you should be buying with both hands. What I have a hard time convincing people is that gold is cheap at 3,000. See, people are stacking, a lot of stacking back at $300, right? So 3,000, it's hard for me to keep stacking, but I know if I don't want to go broke, I'm going to have to keep stacking, right? You see, the poverty mindset is the one saying, no, it's too expensive. I'm keeping all my dollars in that fiat currency. That is the wrong move at this point. The wrong move. Why? Because they have to print to keep your house in nominal terms up, to keep the stock market in nominal terms up. But I don't think they can. I think both the stock market's going to come down and the housing market are both going to start to drop in nominal terms. Don't get me wrong. They're going to print the money. And that's why you should be protecting yourself. Get a little bit of gold. Get a little bit of silver. But here's the thing. Here's why I know that gold is such a great thing right now. You see, there's a thing called interest rates, right? All right. For example, on the 10-year bonds. Let's just take that. The 10-year bonds, I don't know what they're paying. 4%, let's call it. Okay, 4% on the 10-year bonds. So actually probably closer to 5 now, but it's 4 point something, right? Okay, so that's what the government gives you on their money, right? So they saying, hey, look it, inflation's only at 3%. We're giving you 4%. Just buy our bonds. You're going to be fine. Now, if you do that, you're an idiot. Why do I think you're an idiot if you do that? Well, because I think the real rate of inflation is 8 to 10%. You can go on shadow stats and see the way that inflation was measured in 1980s. In the 1980s, our inflation rate would be between 8 and 10% right now. Now, even by their own standards, they're talking between 5 and 6%. Nowhere close to the 2% target. But here's the funny part, right? Here's the funny part. The Fed is already starting to reduce rates. That's just waving the white flag against inflation. Okay, so you got 4% on the bonds. Let's just use round number. Let's call real inflation 10%. They're giving you 4%. Every year, you're losing 6% of your money in the form of theft to the federal government, right? Because they're the ones with the printing press. They're going to keep printing. They're going to pay you 4%, but they're going to run inflation hot. Going to run it at 8 to 10%. Now, why? Why in the world are they lying to you? Why are they telling you that inflation is only 3%? Look, there's these things called pitchforks. Government's very afraid of pitchforks. You know, go get a pitchfork when you're figuring out what they're doing to you. Look, they're running negative real interest rates, right? You got 4% on the bonds, 10% inflation, negative real interest rates of 6%, meaning they are doing a confiscation from you every year 6% of all your money that you have in the bond market. Now, if you just have it in cash, you're losing about 10% a year. But let's talk 6%, right? Just in 5 years, and it's going to be much worse than this because the inflation number is going way up. So it's going to be much worse than this. But just in 5 years, at 6% loss on your money, that's 30% of your assets wiped out, right? 30% of your money that you have sitting in bonds gets wiped out. If you just have it in the bank, earning 1% interest, you're closer to 10%, which would be 50% of your money wiped out just in the course of 5 years. So they have to lie to you and tell you inflation's 3% so you don't go get the pitchforks, because we know who's stealing our money. Well, me and you do. The general public, they have no clue who's stealing your money. They just know that they're broke all the time. They know they can't afford eggs anymore. They don't get it. The government has stolen the purchasing power. Makes everything go up, right? Now, here's the thing. You see, a lot of the general public already, they're broke, right? They have absolutely nothing. And they're going to be fine. They're going to be fine, right? When we start to hyperinflate a little bit, they're going to be fine. When we go from 10% to 20%, the people that are broke are going to be fine. Why are they going to be fine? Well, because they're still going to be broke. Now, maybe they can figure a way to eat. Maybe they go to the food bank and wait in line for 2 hours and get a couple bags of groceries. But the broke people are going to be fine. How are the rich people going to do? Well, they're going to be fine too. Why? Because their assets are going to keep going up, because we're going to keep printing money. That inflation is good, right? If you own a lot of gold, you'll notice that it's going up, going up. Now, when I started my channel, not that long ago, about 3-4 years ago, I don't even know how long I've had this channel, but I was screaming at you every other episode to go buy some gold. It was about $1,700 back then. We're almost double that. It cost you about $32.50 to get an ounce of physical right now, when you could have bought it at $1,700 back then. Do you see what inflation's doing? You see, if you're rich and you have a lot of gold, you're going to be okay. Now, who's going to be in trouble? The people that are going to be in trouble are the middle class, the ones between the people that are broke and homeless, and the ones between the rich. The really wealthy are going to be fine. The broke and homeless are still going to be broke and homeless. But the middle class, they're the ones that are going to get wiped out. They're the ones that are going to feel the squeeze. And believe me, it's going to be a big squeeze, and it's not going to be like a big hug. It's going to be like a big bear hugging you, right? I mean, it's not going to feel good. It's going to be painful. You got to do something, and you got to take action, right? Now, you can sit there in their banking system. You can put your money in their bonds. They need you to buy the bonds. You realize, well, just this year, we got to sell $7 trillion worth of bonds. Who's going to buy those? Are you going to get out there and buy those? Maybe, you'll lose 6% a year. You don't mind losing 6% a year, do you? I'd much rather be in the gold market. Do you realize gold has outperformed the bond market for the last 25 years? Average return on those bonds, about 4%. Gold average return for 25 years, 9%, right? Over double, no counterparty risk of the government stealing your money, which you never know. They could do, right? They decide they don't like you. Maybe they just take your bonds. We seem to do that to people around the world. It's kind of funny how that works, right? But I would much rather have my money in real assets. Get some gold, get some silver. They're outperforming bonds 2-to-1. How are they doing against the stock market? Outperforming the stock market for the last 25 years. Isn't that incredible? Gold. Nobody talks about that. They don't talk about that on TV. I don't even know if we're allowed to talk about, right? They don't want you in gold. Why? Why don't they want you in gold? They don't want you in the GLD. They want you in the paper gold, because once you got that physical gold, you're out of the system. They don't know where it went to, right? But you're sitting there with a big smile on your face when it hits 3,000 an ounce, when it hits 5,000 an ounce, when it hits 10,000 an ounce, 20,000 an ounce. They don't know where it went, right? It's out of the system. You're sitting in that GLD. They can just wipe that out. They can confiscate all the gold in the GLD. Very easy to take it, right? But you and me, we're a little bit smarter than that, right? We're going to go out and get some physical. Now, I know a lot of people can't afford gold. I get that. They're giving the silver away. They're giving it away $35 an ounce. Go back to 1980. It was 50. Put in inflation in there should be, well, sitting around 150 right now, and they're giving it to you for $35. Oh my goodness, get out there and get some. Why are you still listening to me? Get out there and get some physical. Physical's what you want to be holding. If you like this stuff, before you go buy the silver, give me the thumbs up and punch that subscribe button. Get out there, everybody. Have a great day. We'll talk again real soon. Bye-bye now.